It's recording has begun. It's November 11th, 2015. It's a Wednesday evening, the day before good old Janet Yellen's 10 a.m. speech tomorrow. So expect fireworks starting off right after the market opens. This full disclosure, this is purely for financial education and not for any solicitation or financial advice. So with that, let me just let me open up one screen here and then just to start off with a couple of quick observations. This is what I felt at the end of the day today. Today alone, and again, I'm a straight shooter, so I'm telling you the way it is, okay? Today alone felt like one of those days when you're driving along, you're cruising, you have your position set up. Imagine you're driving on a beautiful highway. All of a sudden, there's thunderstorms. So you're managing the car, you're trying to stay on the road, you're slipping and sliding, you're still okay, and then all of a sudden you just get sideswiped, not by another car, but just by the background, which is basically heavy, slippery weather. Well, the slipperiness today came from oil, and we know that, okay? And the fact is that the markets, even though they're correlated to oil, there's a lot of other parts that were also moving, and it was just one of those bizarre events where you tried to stay on the road, but you just slipped and slid, and all of a sudden you realize at the end of the day that despite all the different little profits and this and that, and I'm just talking about my book, you ended up in the red. There's nothing wrong with that. There are a couple of very important video casts that I did where I talked about the fact that every single day, that if I wanted a green P&L for that particular day, then it would be a loser's game going forward. Well, today was basically a reflection of the same things that I preach about. It didn't feel good, but that's okay. Because despite my diligent efforts to navigate the market back and forth, buying the puts, buying the calls, trading this particular a couple of stocks that did very well, and then some of them which were up nicely and then gave in, even though I know they're still on track, they're still on the road. The end of the day, you leave as a trader, you look at your P&L and you say, God, I should have done that. I should have done that. But that's called volatility. And the primary purpose of this particular session is to not only to guide people into giving a little bit of a roadmap on what we can expect going forward, what I see, despite the fact that every single buy and sell program that's out there in the market is basically a fake out. One of the hardest things to do in trading is to have a basis for where you think the market is going and acting on it. Now, while you're doing that, it means taking in some body blows on certain days. Like I say, the sacrifice of the pain of regret, sacrifice is far less than the pain of regret. So people who sacrificed a few extra dollars today, at least on paper, in my opinion, on some strategic bets, selective bets on the market, are going to be huge winners going into not necessarily Friday, I warn you, but going into monthly expiration, which is next Friday. So based on that, I just wanted to give a little bit of what I see is going on. There's a lot of lines on this chart, so I'm just going to do a trick here and remove all the drawings. I will basically hide all the drawings. How about that? Okay, so it's clean. Can everyone see the screen here? Yes? Great. Okay. Now, remember one thing. I am somewhat responsible. It's not a fiduciary responsibility, but I'm somewhat responsible to make sure that people stay somewhat safe in this type of environment that we call the stock market. So for that reason, I have to be somewhat cognizant about the fact that I can't get too bearish or too bullish on any particular stock or the market environment. And that's one of the reasons, based on what I was seeing on many different fronts, which actually played out on both sides, up and down. And that's the reason why I kept on saying don't force trades. Now, some traders did it, who played upon some of the text, for example, and really forced the trades, did very well. And that's great, because that shows that they had the boldness to go out there on days like today and say, you know what, I'm going to play that Baidu, I'm going to play that Netflix, I'm going to play this and that, and I'm going to go ahead and just nail it. And guess what? In between the ups and downs, they did do that. And so I give a very hearty congratulations to that, because that's, that's just the way it should be done. But myself, as somebody who runs a subscription service, I have to be somewhat, sounds kind of funny given the fact that I'm a pretty aggressive trader, but I still have to be somewhat conservative in the way I'm delivering the content that I want people to get involved in. Okay, so I'm sure a lot of you understand that, and because my thing is consistency, not just a one-day wham bang type of thing. And my consistency overall has been steady, and I intend to remain that way. So saying all that, let's take a broader view of what we're seeing here in front of us in in real time. And this is the E-minis, the S&P futures that we're seeing. This is a daily chart, all right? So let me start off by saying this is looking frigging phenomenal. And let me tell you why. We were down 55 points. We were down in the S&P 7 points. On the Russell 2000, we were down the most. It was down 0.8%, and it was down about 10 points, 9.63. The NASDAQ 100, the NDX was down the least. It was down 0.1%, barely down. It was only down 4.79%, thanks to the Teslas, thanks to the Amazons, specifically thanks to Google, thanks to Priceline, and all those stocks. Amazon primarily, right? But numbers don't really matter, because the reality is it's what positions you're in and what you're doing. And if you're lumped into Amazon, it was a phenomenal day. I still have my long-dated November calls that I bought way back in October, the ones which were late November. If you go back to my trade alerts, you know I had the mid-Novembers also in the picture. So those are still going. But I'm not buying newer positions. I'm just riding that tail. I won't even tell you what those calls are. Just take a look at where the prices come from in November. Okay? So the point is that despite all that, my cautiousness today on the tech side, to be honest with you, cost me some money. And that's okay. It didn't feel good. I would have loved to have lumped in and bought heavy duty. I did have Netflix from a trade alert yesterday, which worked out good, but I didn't have enough. So the point is, what I'm getting at with everyone is that it doesn't matter what happens in one day. It's how you set up going forward is what really matters. So this chart that I'm looking at, I'm going to show you a few things. After I take my sip of my red wine, it's been a long day, that why I think this market is definitively going up towards testing either the old highs, the 2134 on the E-minis, and on the S&P 500, it was 2134.77. It's funny that the E-minis also showed 2134. Anyway, and what I'm seeing in the technicals. Now, keep in mind that I like to keep things simple. I am not a complicated, hardcore Elliott wave theorist and all those very complicated rocket science type of things. I look at things simple, and so far it's worked out great. So here are these couple of things that I like. That over a very short period, I think it's been 1, 2, 3, 4, 5, 6, 7 days. where a bull flag has been formed. And I'm going to draw these lines right in front of you guys, okay? So no magic, just showing you. This, my friends, is a bull flag. Let me just show you how this is done. There you go. Okay. This is a bull flag. Now, does it mean the bull flag is going to get stopped at this gray line, which is the mid-Bollinger? Who knows? Maybe not. What's the low end of the scale of the bull flag? That's 2045. I honestly thought, given what we are seeing today, that we were going to hit 2055 to 2060. Therein lies my basis for when I shorted the market and actually did very well on the first round. The second round didn't work out on the short side, right? So the point is, and that's on the pivot charts. I don't have that on this particular computer, but if you look back on the Twitter feed, I threw out multiple charts on earlier in the day showing what I thought was going to be the gap fill, or where we were going to go on the pivots. Now, here is another one, and this was later in the day, so I'm just going to show this to everyone. Bear with me 1 second. These are these algo pivot charts that I talk about, the bar charts. Might be a smaller screen, but still. So this is the gap that I thought was going to get filled today based on what we saw. But you know what? The market has a different way of doing things. This was put out later in the day when I called the pinch Bollingers, which means that there's going to be an outsized move tomorrow, pretty much before and after Ms. Yellen speaks. That outsized move can bring us down to the gap fill right here, which if you scroll back on my Twitter charts, you'll know exactly where it is, which is at 2055 to 2060 on the S&P 500. So if you do the math, that's roughly about we close at 2075. So you're talking about 100 points to the gap here. It's no biggie, because at that point, I believe the support level really solidifies and we bounce from here. If we break that, that's a different story. But by the end of the day, we were pretty oversold right here, and I believe that the market sent a message that we do not want to go fill the gap yet. That was the message the market sent. Let me get back to the daily charts here. Remember, the longer the time frame is on a technical chart, the better off it is, as in solidity or credibility, or where the market can go. What does that mean in simple English? In simple English means that if you're watching a 5-minute chart or a 15-minute chart or a 60-minute chart, there's a lot of noise out there, right? The dailies and the weeklies cut out the noise and you look at the broader picture of what the market is doing. The hardest part about this business is that if we, or especially about the forecasting business that I'm involved in, right, is that regardless of our most precise forecast, it doesn't always work on our time. It does work out. I mean, my predictions from way back, whether it be down from the 1831 level or from the September 29th level to buy the markets and stuff, all have worked out, but it didn't work on our time. In fact, the speed and rapidity of this move has even taken me back. But part of the reason is, the real reason is because a significant amount, and I've mentioned this quite a few times, a significant amount of institutional shorts were lumped in, thinking that we were just going to break this 1830 level and go down to the 1700s. And they never really covered their shorts as we move forward. Remember, let me show you a quick example of what exactly happens in the real world, okay? So let me get that lovely drawing pen of mine. So let's say you shorted $100,000 here, okay? So you shorted $100,000 here, and that $100,000 on the crash went to 200. So you're like, wow, lottery ticket. So you cover, right? In order to take shorts, take profits by covering. In other words, buying back what they sold short. Simple. So you covered, and let's say you covered a bunch, and then it went up here and you shorted here again. It did the volatility curve, it came down here, made a higher low, and then it took off. So you're still, so let's say, for example, you when you short 100,000 here and it went down to 100,000, some of the dogmatic shorts, believe it or not, that's what I'm hearing. They didn't cover the whole lot. They still stayed short, and they're still short. Now, given where we are right now, they're still profitable because they sold short here, and the market still, the market went up a little bit, but it's still, if you look at it net, they're still profitable. So they're sticking to their guns that this market cannot go any higher. So it adds fuel to the fire when on certain days when we're technically overbought and all these indicators are showing, and you try to short the market and it just doesn't do it. That's because the hardcore, and I'm not talking about you and me, I'm talking about the institutional shorts. Those guys have not yielded yet. In other words, they haven't capitulated, they haven't cried uncle, right? That's what happens. So saying all that, that fuel to fire up the market to the old highs, which is 2134 and higher, is still there. It has nothing, ladies and gentlemen, to do with fundamentals. It has nothing to do with actual basis of what a company is doing. Does Amazon really merit a valuation at 700? I think Morgan Stanley raised it to 800. Yes, maybe 2 years down the road, not now. But it's a growth company, it's producing numbers, and they're growing, and big money is chasing growth. So let me bring it back to the same point before I get into this chart in a second. Okay, is what is exactly going on with sorry, 1 second. So what is exactly going on with the money management side of the business at this time of the year? Well, what's going on is the fact that they have literally a very few number of days to print a positive number on their portfolios. Okay, having worked on the wealth management side, on the portfolio management side, I know how money managers think. You think they're very rational people, that they're really looking at things on a rational basis. They're not. They're just trying to save their jobs. Okay, so when what they're trying to do is they're trying to add beta to increase their alpha in their portfolios. What does that mean? They're trying to add high momentum, high growth Netflixes, the Googles, the Teslas in some cases, the Amazons, the Regenerons, and every stock that moves in double digits on big up days. They're trying to put that in their portfolios so that it juices up the portfolio and pushes it forward, because they literally have a deadline for December 31st. The mutual fund industry's deadline to mark up their portfolios finished on October 30th, end of October 31st. Okay, for the rest of the world out there, the other the hedge funds and you name it, the private equity funds, the pension funds, they have to mark up their books by the end of December. So the chase is on. Okay, so when the chase is on, you are going to see outsized moves. I'm trying to get these things out here. You're trying to see outsized moves on sorry about that, on their on stocks. In other words, you just keep on chasing the same ones. In fact, you could have just sat there and traded Amazon and a few other stocks and just kept on buying them every time they dip. Apple doesn't always work like that, but the Googles, Priceline obviously croaked. I told people before I didn't like the way, I mean, I liked it and in the 1300s, not when it shot up to 1460. So that's the truth, that's the reality of what goes on in the underlying belly of the market. Okay, The rest of the stuff is all noise. Now, how you filter it out and how you deal with it on a daily basis, I really can't really explain that because I don't control the market. But I hope you guys understand that there is really a serious underperformance issue here that's happening with the stock market, and these fund managers are really in trouble, and they've been in trouble for a couple of years. So now they're trying to catch up. All right. And it's only in the last 6 months or so that we have actually started to see a net inflow by the average investor into the market. Quick fact before I get into this chart. Over the last 10 years, the number that I heard, I believe that, or since 2008, 2009, there's been $10 billion worth of outflows out of the market. No money's coming in the market. Trust me. Okay. Nobody likes the stock market, and the higher it goes, the least they like it. Traders are a different breed. We try to capitalize on all kinds of different stuff, and but the person out there, aside from their 401k contributions, aside from their what do you call mandatory pension contributions, which are used by their money managers to put out, the what do you call invest in the market. They're not putting actual money in the market. They're not. So the real surge of the trillions of dollars that are lying in the money market funds, well, we haven't even seen it yet. Okay, we haven't even seen it yet. So if you think this market can go higher, well, go take a nice long walk. Okay, because I'm telling you, this market can go a lot higher than you can ever imagine, that I can ever imagine. So saying all that, let's take a look at this. I'm trying to get these drawings out of here, but it looks like they refuse to move. So I'll leave them in there, okay? All right, so let's take a look at this. This is a nice little cartoonish pattern here. So you get a nice fat move. This is a bull flag. The lower end of the bull flag is 2050, or, call it, yeah, around 2050. And that also coincides with the gap that I talked about, which is 2055, all right? Now here is the exciting part here. And this does excite me because I've made money off this before. Remember, it's all behavioral game theory. You get excited by things you did well on. That's it. So these things have done very well for me, so it's great. So on a daily basis, on this minor bull flag formation, a very small drop in the market over the last 7 days, 1, 2, 3, 4, 5, 6, 7, yeah, 7 days. Look what happened to the internals. This is money. This is what I want all of you to focus on. This is the swing trade. This is not the 5-minute trade, the 15-minute trade, and this and that. Okay? You want to play it in the purest form, you got to do the S&P calls. Okay? The S&P options. Because individual stocks per se, you don't know whether they're going to get sideswiped by some bad news, blah, 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 all kinds of stuff. So the purest way to play it is to play it through the actual indices. And that's fine. Remember, it doesn't matter what your money is fungible, right? So you can use it for whatever purpose you want. You don't need to just stick to one stock. You see my flexibility. I'm showing you Verizon. I'm showing you this, a couple whole different biotechs. I'm showing you stocks like NetTease, which I've only traded maybe 3 times in my life. I'm showing you Voyager, a new IPO, which went ballistic, up 25% today. And by the way, that was underpriced. When the underwriters played it in the market, Voyager, it was underpriced. Great buy. I just bought some shares and I sat there. So anyway, so diversity is good. Just don't get too diverse with your holdings. So saying all that, this is exciting. When you see this, do I need to even tell you what's going to happen? Are we given the primary trend, which is still up? The primary trend is still up. You just have to draw a line. Okay? So this line that I'm drawing in front of all of you, and I've shown many, many times in my charts, is a channel. The channel points to 2200. No one needs to be a rocket scientist. This is a bull flag. The bull flag is negated if it breaks below believe it or not, the 20, this upwardly rising orange line is the 34-day moving average. So if it breaks below the 2025 level or the 2030 level on the S&P, then we're in trouble. Then there's a trend change. But aside from that, it's still a powerful bull flag. And this bull flag has caused a nice fat oversold condition to develop. What happens every time we get here? I don't need to tell you. Just look at it yourself. Every time we get here, we bounce hard. Every time we get here, we bounce hard. Now, we are just getting there. It doesn't mean we can slip and slide a little bit more for the next couple of days. But here is my forecast, and I've said it before. We generally find the monthly expiration, the third Friday of the month, to be an extremely powerful bullish event. Every time I've said it, 99% I've been correct. So next Friday is really where you mint the money. In between, they're not going to make it easy for you. They will not make it easy for you. But I'm sticking to the fact, sticking to my experience, that next Friday is where the market really gets up towards going back towards a 2134 level up here. That's my projection, because it's not just about technicals, it's also about seasonality and what is going on and the reasons I explained before. Now, when you look at next Friday, do a day count. When's Thanksgiving? What date is Thanksgiving? Can somebody tell me what date Thanksgiving is? No one knows?
26.
I'm getting an exact date. 26th. Okay. So when you look at the calendar here, and these things do matter, believe me. Okay? The 26th is basically Thursday, obviously, the week after. So I highly, highly doubt that the market is going to basically take a nasty, nasty drive. I could be wrong, mind you, before Thanksgiving. So given where we are right now, given the fact that we got so deeply oversold here, I expect a bounce. Will the bounce start off tomorrow? I have no idea. I hope it does, because I'm pretty long with a bunch of stuff. Okay, I do have some hedges on the UVXY. So that doesn't really give me too much solace, because every time it hits 29 bucks, it gets slapped down huge like last time. But this is certainly, I'm trying to get these lines out of here. So bear with me 1 second. Let me see how I can do this, because now it's getting very messy with these yellow lines. Hold on. Looks like they won't leave us. Hold on. Normally there's a line here saying exit the thing, but I can't seem to get it out. So this is very strange, actually, to be honest with you. But I can't do anything about it. So bottom line is, the bottom line is that when you look at this here, this, I do apologize for this. Let me try to see if I can get this out. Okay, stop clean screen mode, reveal icons, background, and taskbar. No, I don't want to do that. Bear with me 1 second. I'm just trying to get these things out of here. Let me do this. I just switched you guys to another one of my screens, but looks like this followed me there, right? 1 second. This is okay. So I guess, well, let me just do this. Nope. Bear with me. Close the program, restart your doodle would disappear. Close the program. Okay, if I close the program, you guys all disappear. So that's my good friend Margin Call's idea. Okay, I did it. It wasn't a closing program. There was a nice, there was just a delete button, but thanks for the idea. Okay, all right. So now we have a clean chart. So sorry about that. Okay, sorry, distraction. So when I look at this, it's exciting. So even if it doodles around a little bit, let's say we make another new low, I'm going to be a very aggressive buyer because I do believe that as we go into November 4, options expiring November 3, which is monthly expiration, and November 4, I believe that we are going to make we're going to make a new high. So saying all that, it's all very tactical. So this on a daily basis, extremely bullish. Let's take a look at the hourly. On the hourly, this is the channel that we're following. 2050 on the low, which we can get to. So be prepared for that. 2050 to where we closed at is basically about 120 points. We can handle that. We've handled worse, right? So be prepared to have cash on the side and take advantage of the channel lows. If we bounce from here, the most I believe we can get to on a short-term basis is 2085. So you're talking about another 13 points multiplied by 6 or 7. We are looking at around 90 points, right? About 70 or 80 points. So on the Dow before we hit the top of the channel. These things are be extremely accurate from what I've done before. So saying all that, if we do break out of the channel, and this is on a short-term basis, then of course we can attack. We have a pretty free-fly zone, as I like to call it, where the market's going to move quite rapidly up towards the 2100 level. But this is, but I've shown all these charts before. Oversold, we're going to get overbought again, probably by tomorrow morning. At this point, the futures are indicating, and this was today, so you can see how choppy the market was. Nothing really changed, but it was pretty goddamn choppy. So right now, as far as I can see here on my other screen, futures are up about 4 points, and you can see that happening right here. Let's take a look at this particular chart, which has kept me in the game for a long time. All right. And have helped me in well, not just helped me, but benefited and helped me manage my positions a big way. This is a chart of the same thing. This is a SPICE. So many of you who actually study my charts know what I'm talking about. So I'm just going to go over this very quickly. These are consolidation channels. So is this. This is a large consolidation channel. The lower end of the consolidation channel is supported by two things. The lowest end is supported by the actual channel itself, which is 204.95. Call it 205, right? So right there. So that's 2050 roughly. It's also supported by the Bollingers. Remember, the Bollingers act as major support. So the Bollingers here, we bounced off nicely. So here's the other Bollinger, and that's pretty much right where we are. If I zoom in to see what happened today, so we were here. This red bar that you're looking at was where the puts really went, was fantastic, did very well on those right off the bat. Then the market turned. You see this green candle here, right there. That basically hit started to go back up again. Then you got the reversal, and then you got the end of the day. Now all this was obviously happening with what was going on with oil and all kinds of stuff, but nothing really changed. If you look at this chart here, it's not like the world was ending. In the meantime, the internals, refused to get really oversold, which would be really nice if it didn't happen. And at this point, I wouldn't be surprised if it really doesn't matter what the futures are right now. It's how Europe opens, how we open, and then what happens in the first 15 to 20 minutes of the market. So I wouldn't be surprised one bit if we fall for whatever reason. I repeat, for whatever reason, if Janet Yellen starts to talk all kinds of stuff, and I'm not going to sit here and analyze what she's going to say. The bottom line is she is raising rates in December or latest in January. It's happening. But if she comes out with something from left field, then do not be surprised if we start to get down and hit the 205 level. That's going to be another 100 to 150 points. So we have to be very prepared to switch sides and move fast. In the meantime, it does not, I repeat, it does not change the overall picture of what the market is trying to do, which is eventually go higher. So going back to it, let me show you the bearish scenario. The bearish scenario is, which I've mentioned before, is you have a head here, you have a left shoulder, and guess what we did today? We actually hit the right shoulder right here, and it went down. So this is the neckline right here, which is the bottom of the gap fill. I have the big arrows there. I do not believe we break the neckline. I could be wrong. So if we do break the neckline, then we're going down to the bottom of the channel. If we hold the neckline, then we're going to bounce from here, and it's going to be a very sharp bounce. Now, what's going to tell me that this neckline is going to hold? I don't know. What's going to tell me is partly the internals, what the background is, the noise in the market, the ferocity of the selling. If we start to go down, say for example, if we start to go down like this, I talked about this in a group session last night. If we start to go down straight down like this, then there's obviously what we call an impulse sell wave. These are very hardcore stuff. That means some big basket of stocks are just going to get dumped. Do not try to rationalize what stock's going down. Everything's going to go down. Okay, for no other reason that there is a huge large scale hedge fund selling or whatever it may be. So if this happens, if I start to see this happen, then obviously I'm going to blow out of all my long positions, my trading long positions, and then wait for it to hit this mark here, which would be the top of the upper gap. And this orange line that you're looking at here, if I scroll back, let me just show you. If I scroll back, every one of these lines have some major significance. So it's not like just drawn for the fun of it. We are going to be looking at, one second. Let me go back on the daily. Okay. So the reason this line was drawn was primarily because, and this is all technical stuff, okay? So not the most funnest stuff, but it's good to know. That this was the support level that we were trading on. This was the trading band we were trading on until we completely collapsed, okay? So this trading band was 204, and on the upper end, it was 213. 213.70, which was the highs on the market. So this was the trading band that we were trading on for a pretty long time. A few months, quite a few months actually, and the market just basically did this. Not an easy time, mind you, but heavy volatility, but we traded in a nice fat trading band. That band gave away, we know that, and at this point we are almost back to up here. So do not be surprised if we start to basically trade after we move up. Either we move up a little bit, or we move down here and start trading like this again. Okay, before we do whatever move that we do, whether we break out or whether we break down. So we don't know that yet. So what I'm warning people about what's going on here is that that these lines that I'm showing you, one second. Let me go back to the 1 hour chart so it's cleaner. Okay, there you go. Okay, so what I'm showing you, that this head and shoulder is very much in motion right now. And there is a danger that we fall below this gap here, and that we can pretty much plummet all the way down here, and then create a very strong base for it to move on. So just keep that in mind. All right. So saying all that, on a very short-term basis, don't go for very long-term swings and stuff, because we don't really know what's going to happen in December. And even though there is a performance chasing going on, they might dip the market lower before they take it higher. So there is absolutely no guarantee or assurance that things are just going to move in a straight line, which brings me to a very important point. And I want everyone to understand it. I know all of you, most of you do. Trading is not a binary business. In other words, don't expect to buy something and then go straight up there. Yeah, you can catch a wave. That's a different story. Okay. But even this move up here, which has been humongous, did not happen in a straight line. So let's face facts here. Let's face reality and the truth at face value. It did not happen in a straight line. There were lots of little heartaches, and people who don't understand the internals and the technicals really didn't capitalize at all from this move. And most people, to be honest with you, started chasing the market up at these levels, which was where the top, where the top was being, or the short-term top was being formed. So nothing is in a straight line. So just remember that. Now, the other thing that I want to show is let's talk about oil. All right, we're talking about oil quite a bit. So one of the easiest ways to look at the USO is to do it on TradingView, because it's got a white background, right? So and you can actually see what's going on. I have some very precise charts on the USO. I do feel, and I did mention this last week, that we were going to hit the 1380 mark when people were like, no, let's go buy oil, let's go buy oil. I said, no, it's going lower. I had no idea, but it just looked like the charts were going lower on the Thinkorswim. So looking at this here, we're looking at oil possibly creating a bottom, which I've put out there. And remember, everyone has to have an opinion. I can't be just like saying, okay, it just can't happen. But I do believe that this bottom holds. And if this bottom holds, what are the next levels of movement? Well, the next levels of retracement on the way up is the 50. This is a 1-hour chart, but the 50, the upper Bollinger. So you're looking at about 50 cents. Okay, 50 cents they call it, right? 50 cents. That guy's a real player, right? Bankruptcy, and now he's partying out there. So anyway, so the point is that this 50 cents that we might very well get, or 80 cents actually. We closed at 13. What do you close it? 1376. Yeah, about 50 cents. 50 to 60. No, more like about 65 cents is almost 200% or a little less on your USO calls. So if you're going to play the lottos and you're going to stay disciplined on what you do, then this is what you're looking for. Okay, there's a gap fill here. It coincides with the retest of the 50, coincides with the retest of the upper Bollinger, and the minimum move would be a pattern symmetry move would mean that we come up to at least where the supply point was, where most of the selling started happening, right here, around 1420, right? We are definitively oversold, so we're good with that. And I think people who are aggressive players on playing these cheap lottos are going to be rewarded in a big way. Now, if you want to buy some time, then buy the 13.5s and the 14s going out to next week, the calls. And they closed at around 51 cents, but I've been starting to buy it around this level in a big way. The low was 47 cents, and the high was 70 cents today. So do the math. That's a pretty fat returns. So if you bulk up, in my opinion, give or take around these levels, if it breaks here, then all hell breaks loose. At that point, oil really plummets and takes the whole market down in a big way. Keep in mind, there was some very important news headline rumors that Saudi Arabia and Venezuela are meeting about production. What are they're probably talking about production cuts. I don't know what they talk about, but the point is they're talking about oil. So that itself is generating a bit of a move up in oil after hours on the oil futures. So Just keep in mind that a 70 to 80 cent move on the USO equals to about 200% on your calls. So 200% on your calls, you're looking about, going up to about a buck 50 or so on those 50 cent 13 and a half calls. Not a bad, that's not a bad. It's a phenomenal return. But you got to bulk up. You got to buy, obviously quite a bit of it. So oil's definitely, I think is very much in play. Now, let me show you one other thing about moving on to a different chart. Hold on. Show you the same picture in the oil futures, right? I have a very clean chart here. And remember one thing about behavioral finance. We try to overcomplicate things because we just think that, oh, it just can't happen. It's never that easy. Well, sometimes the most difficult things in life are easy. And the reason why we don't do it is because we think it's too difficult. All right. So that's my, Dr. Phil comment to all of you. Aside from that, this is what I'm seeing going on here. And this is the actual futures. Definitive bottom. In my opinion, this is a definitive bottom. It doesn't mean it can't pull back a little bit and then move from here, but I think the 42.5 level holds. Remember, algos and high frequency trading programs don't have emotions. They look at numbers. So if they're looking at numbers and they're playing off that, well, let them play off that. This is a very symmetrical triangle. One of the things we talked about in the group session last night was with a few of my members, and I do highly, highly, highly suggest that all of you who haven't attended these group sessions sign up for them and attend them because they're hugely helpful. We talked about a massive, which was brought to my attention by one of my favorite members who's been with me from day one, that what if oil gets here? Well, guess what? It did get there. So what does it create? It creates a massive, massive, ladies and gentlemen, dragon bullish pattern, also known as a W pattern. Okay? Now, unless something is really going bad and everybody stopped driving in China and you guys are not, driving your cars whatsoever and not looking to buy that third car or the second car, and oil production is just like going down the chute, and the Saudis don't care if their whole country economy collapses because they're not getting their billions a day, well, then you're probably living in a world that I don't live in. People look after their own self-interest. At a certain point, pain becomes intolerable. And for countries which rely on oil, including Canada, some of you are from, okay, they will take preventive measures. Canada won't start a war, somebody else will. So I'm not kidding around, but it's just the way things happen. Geopolitics works that way. So at certain price points, the price becomes so cheap that demand starts to rise. And that was a serious paper that was written at Credit Suisse a couple of weeks ago, where one of these analysts talked about the fact how and showed the numbers that actually oil demand is rising despite the fact that there's an oversupply. Okay, and because at a certain price point, it gets so cheap enough that everybody wants it. Everybody wants to use it. You know, that's just the way it is. It's the ISLM curve in economics. If you go back to economics 101, maybe some of you guys took it, maybe some of you guys failed it, I don't know, but it's all supply and demand. At one point, supply becomes so abundant and prices fall so hard that demand starts to rise because more people want to use it. So what does it do for the price? It makes it go higher. I think we're at that inflection point right now. This is my opinion. Okay, so saying all that, if this is a massive dragon bullish formation, then oil is going to climb up back again, not tomorrow, but over a period. But this happens really quickly, right? This happened from one Wednesday, 1 week down the road. Whoa, 1 week down the road. So why can't it be that 1 week down the road, going into next Friday, that we move up $4, $5, $6 on oil and get up to 48? Why can't it happen? It happened before. So what I'm getting at, these cycles don't take months. They take a week, maybe 2 weeks. Is everyone clear about that? Yes? Can everyone hear me? Am I still online? Okay, good. So the point is that if this happens, ladies and gentlemen, okay, let me stop myself for a minute here. It's not the scarcity of trade recommendations that I put out there. It is the scarcity of your mental fortitude or your boldness to put money where the trade should be. It happens to me too. My trades are a little bit bigger. I feel the pain more. I'm sure some of you guys are out there doing bigger trades. I'd like to reach a level where I'm doing some humongous trades. I used to do a lot more. Some of my good friends like Margin Call know that from the years past, okay? But I've become a lot more conservative. And I'll tell you one thing. These are the points, in my opinion, this is just my opinion again, where you want to be the most aggressive. Remember, aggression has to be at lows, not at highs. Yes, you get that big surge up, but what's the point of being really aggressive here when you get the last 5% of the move, when you can be super aggressive here? But of course, at these points are the point of maximum fear. This happens all the time. Forget about oil. It happens all the time with the markets. The point of maximum aggression was August 24th and September 29th, the two lows in the market. But that's not how humans react, right? Because the algos and the high frequency trading programs make sure that your fear is so ingrained in you that even with the markets climbing way up, that they force you to stay on the sidelines or not have enough in your books. And you know it. Okay, I don't need to tell you that. So my point is that this is the point in my belief of point of maximum aggression. So if we have 1 week to go, and I'm not saying in 1 week it's going to go to 48. Let's say it even gets back to a sensible level, which is 45. From a pattern symmetry standpoint, that's that's doable right here, right there. Okay, 45. So 43 to 45 in 1 week. And if you have a lumpy position in the USO lottos, are you not going to make money? But if you keep on slicing and dicing and every time it goes up, 10, 15 cents, you're out of the picture, you're out of the picture, you're out of the picture. Well, guess what? This happened in waves, right? So this, ladies and gentlemen, is also going to happen in waves. What is every wave? Every wave is fear and no greed. Honestly, every time it goes up a little bit, oh, I'm going to sell. And then when do you get in? Because it shoots past you. Case in point, not just oil. Look at Amazon. Look at Netflix. So enough of oil. So bottom line is, I think, given where we are, and if we do start thinking like robots, then we are in a very optimal position to make some real serious money off this picture here. Remember, channel top, it might hit a roadblock. Maybe it collapses again. I don't know, but one thing at a time. All right? So passing it on to you. Okay, now we're going to take a quick look at, let me do this here. Just trying to see where I had, okay, there you go. All right, pretty clean charts here. We're going to take a look at Apple, something that I haven't really traded much lately. And I love trading Apple off inflection points. I believe you're at an inflection point right now. Is it funny that Apple comes out with a blockbuster news that they're going to be working with banks on person to person, whatever, personal banking or whatever the case may be, that broke later in the day, right off the 50 and the 34-day moving average and the daily? I don't know, but I can tell you more things. I've seen more weirder things happen in the market than you would ever imagine. Okay, so saying all that, I believe this is a floor for Apple for now. Therein lies the green arrow. Okay, so you got this move here with the 34 and the 50. You still have an upwardly rising, and these things you have to, you over time, I look at many different things. Maybe my brain's a little bit too weird, but I do look at a lot of things here. Okay, so you look at this green line here, which is acceleration band, still pointing up. You look at the Bollinger Band, still looking good. The overall direction of these waves, which are the Bollinger Bands and the acceleration bands, is higher. Yes, Apple did a nice fat pullback on, it created a massive bull flag here, in my opinion. Kiss the 34 and the 50. It's possible it slips a little bit more to the lower Bollinger around 111. Sure can happen. Apple was a screaming buy at these levels. I pointed that out. This massive hollow candle, want to know what a hollow candle looks like? Well, look at it. Was a screaming buy. We bought it, back on August 24th. Should have bought a lot more. This was a hollow candle reversal right there again. Well, guess what? Today, this was actually a hollow candle when I posted the chart, and right now it looks like a doji. I still believe that we have room to move up towards the 123 level. Not going to happen overnight, but give it a couple of days. We are going to see a surge, and if Apple moves up $7, let's say, to hit the acceleration band at 123, you and me both know where the markets are going to go. Apple moves frigging $1 and the markets jump up 50 points. So looking at this chart here, in my opinion, this is it's a good one to play. I bought a bunch of the calls. I bought a bunch of calls expiring in 1 second. Can everyone see the screen? Yes? Because I know I've been rambling on, but can everyone see the screen? Can everyone hear me? Okay, good. Trina said yes, so I'll take that. Hi, Trina. Okay. So looking at that here, I went in there and I posted out there that I'm going pretty heavy on the, not this Friday. In fact, this Friday is probably good. Look, I've seen Apple calls go from 30 cents to $4. You guys have been there too. I've never caught the whole move, I'll be honest with you, other than a few of the calls left over. The bulk of the moves, maybe I caught it from 30 cents to $1.30 or $2, and then I see them gushing by and going to 4. I don't know if it's going to happen this Friday, but so I moved it out to next Friday, and I bought a whole bunch of the 117s, 116 and 117s. What are the chances that Apple fills this gap here? What are the chances that Apple fills the gap here at somewhere between 117 and 120? I think it's pretty damn good. Do you know what those calls are going to be? They're going to be humongous. Now they're at a buck, they're around the $1.40, maybe a little bit more. They're going to be like $4, $5. This gap fill here, I don't know when that happens, but so Apple's a major, it's a major proxy for the markets, and I think it hit a pretty solid level for us to look into. The 4-hour chart is pretty damn good. Look at Apple, all sells today. Love it, capitulation. Look at this, it's a beauty. Yeah, it can move around a little bit and maybe slip a little bit and scare everyone, maybe come down to 115, who knows? If Apple completely comes into this vacuum, that means something is really wrong with the market. Oh, below 114, it's a complete loss. I mean, at that point, the stock is just going to collapse. Don't think that's going to happen. Okay, look at the stochastics, looking pretty damn good. They're starting to turn. Every single time you came down to these levels, look at this. Look where we are. Look where we are. That's fantastic. Let's move on to Netflix. Netflix is a powerful stock. On an hourly basis, it is certainly overbought, no question about it. But can it turn around and then get up to 115 and then move forward? Absolutely. Okay. But just looking at it from a technical standpoint, it is definitely, it's overbought, might reset a little bit. But for Netflix to reset, it just needs to come down maybe 2 points. It comes down 2 points, or comes down $1. It can very easily quickly reset. It doesn't have to be like a $5 move down. So this is the channel that the stock's moving in. I've showed this repeatedly. At one point or another, this stock will get up to that 118 level, if not 120. Let's move on to another one. Amazon, forget it. See what these charts look like? Oh, that's a weekly. I mean, forget it. I mean, this is out of control. This is a weekly chart. What I used to do in the old days, and I'm going to do it right there in front of other people, is do a Fibonacci retracement. Okay? This is the power of a powerful stock. At this point, this Fibonacci retracement has broken through the 161.8 level. This is way out of control. What is the next Fibonacci level? I can't even go there. That's obscene. 1600, maybe that's in 2 years or next year. But at this point, this stock is just the fact that on the weekly basis, it's shooting up like this. I mean, the next stop, I believe, is 700, just a round number. And look at the internals. Do the internals really look overbought to you? No. The internals are overbought, but there's no signs of it slowing down. So this is telling us that this could do this. Let me show you. This is telling us that it could go like this, sideways. What does sideways mean? Sideways means you're looking at 700, probably 720. This stock is just a runaway train. It's out of control. Thank God I just still have a bunch of the calls. Not as much as I'd like to be honest with you, from my October buys. So there you go. So Amazon is just, it just realized the power of this chart where you can't even chart it. Okay? You can't even chart it. It's that powerful. So let's look at some laggards. Tesla. I like it. Bought it. Things started moving right away, up 20% so far since the buy. People ask me, oh, are we buying Tesla? It's looking good. I said, no, it's looking like crap. I even said that. Why was it looking like crap? Because this is what it looked like. It was just falling and falling. I saw the double, this is the two marching soldiers, and that's a buy signal. That's a buy signal. Okay? That's a buy signal, and that's on an hourly basis. And so what's the next stop? The next stop, logical stop, is the 34 and the 50-day moving average. So you're talking about 225. I'll take 6 points on this, baby. I'm already up to 3 points. I mean, 2 points plus. So this is powerful. Now let me tell you something which, just my branding of how I do things here. This massive fall, okay? Oh, Tesla's, it looks like crap. I even said that. And I expected to go down to the bottom of the channel to 205. No go. Now, saying all that, what happened to the 50 and the 34-day moving averages? They never crossed down. Pretty amazing. Now, what does that mean? To a lot of people who don't quite understand the power of moving averages. What it means is that the stock has enough juice enough internal strength not to break the moving average. In other words, the moving averages are still trending higher. If the stock continued its trajectory down, then the moving averages would have crossed down. But they didn't. They didn't. They're almost there. So what if the 34 moves up and the 50 starts to move up? Do you know what the stock's going to do? It's going to go past and close this gap so fast at 240, heads are going to spin. Calls bought at $4, $5, $6 are going to be worth 20, maybe more. So what I'm saying is I'm watching this very carefully. This is an hourly chart. This needs to continue going higher. And this is short term. I'll be an aggressive seller at around the 225, 220 level. That can happen as early as Friday. Now, am I going to sell the whole thing out? Probably not. But I'm flexible. I like seeing green too, but green on paper is a different story than banking it, right? So you got to sell it to make it into cash. So that's up to you. The pattern symmetry dictates that this pattern probably gets completed. So you're looking at about 235. What news is going to come out over the next 24 to 48 hours or not? Remember, technicals precede fundamentals. In other words, the news will come out after the stock starts moving. So this to me is a pretty powerful play on looking at the momentum stocks. All right, there's a lot of other companies and stuff that's out there. People talk about price line. I wish I'd shorted it because I even said I don't like it here. At this point, it's pretty deeply oversold on the daily, but not there yet. If you notice, you have to start curving up. So I wouldn't be surprised if it comes down, does another retest of 1288, and there's nothing wrong with that either. If it blows past the 34-day moving average at 1345, you can rest assured it's going to move very fast to 1378. Okay, and at least touch the upper end of this gap right here, right here. So call it 1400. So this, anytime a stock falls like this, it normally retraces back 50% of the move. So if I take a little Fibonacci retracement, let me show you an old trick that I used to do, and do it like this. What's the 50% level? The 50% level, ladies and gentlemen, is exactly what I told you, around 1391. And an overshoot would be around 1400. So this stock could very well gain back 70 points before it fails again. Because at this point, it is so deeply oversold on the daily, and of course on the hourly, it is actually, believe it or not, on the hourly it's overbought because the stock has gained back almost 20 points, which for Priceline is nothing. This, ladies and gentlemen, is known as what? It's called a bear flag. What is a bear flag? It's basically it's a short squeeze as shorts cover and some new longs decide to buy the stock. What is the danger of a bear flag? Bear flags generally break down. This is a classic bear flag. How do I know it's a classic bear flag? I don't. All I'm saying, it looks like one. If it breaks down, it's going to break down towards 1300 again. If the bear flag is negated, it has to go above 1340, and at that point you are going to see a massive move towards 1372 and possibly engaging the 50 moving average at 1400. So all of them are laid out there. The 50% retracement is 1391. But in order for that to happen, this bear flag in one massive move has to break out of this formation. Otherwise, it's just going to peter down and fall 20 points for no reason. All right, so just passing it on to you. I'll take a couple of quick questions. Oh, did I show you the Russell 2000 yet? Because that I'm pretty hot on. And let me just show you that, and then I'll take a couple of quick questions, and we'll wrap it up. I just wanted to give people a okay, got that. Let's do that good old RUT. Okay. So the RUT right now on the so this is the story here. On the Russell 2000, it's obviously quite dependent on what oil's doing, what the biotechs are doing, and everything. I believe that this channel that we're looking at is going to hold. So we could slip down a little bit more to about 1173 right there in the lower acceleration band. And this is what I think might happen. So I'll just pass it on here. 1 second. Let me get that big drawing tool. And this thing was behaving fantastically. I started buying it. Bullish scenario, it does this. Bearish scenario that it comes down a couple of points. My risk reward is pretty good. Hopefully that holds. And from here, we can make a move up. This, in my opinion, is quite dependent, and mark these words, on what Ms. Yellen has to say tomorrow. If interest rates are overall rising, it's actually positive for banks. It's positive for U.S. small cap growth, and the Russell 2000 benefits. Okay, so saying all that, this is actually directly correlated with an improving economy, and that's something which would be helpful more than the S&P 500. That's the reason why I said that the RUT outperformance over the S&P. Looking at this chart here, just looking at the pattern, this has to hold. Okay, this level has to hold 1170 or so. I do not want to see 1170 break. So if this holds and this pattern continues on the bullish front, you can make a lot of money on the IWMs and the RUTs. So if this every time it came to the bottom of the rising wedge, it bounced. So the top of the rising wedge is around 1224. I'll take 1200 any day. 22 points on the Russell 2000. I think, you know, you could you'd be more than happy, depending on the size that you take. So this pattern, in my opinion, this is a massive dragon bullish pattern. Little bull flag gets completed 1224. When does it get completed? My time frame is possibly this gets completed by end of next week. And once this gets completed, we'll see what happens. So that's it. So I'll somebody asked me, can I show Netflix? I thought I just showed Netflix. One second. Bear with me. I showed Netflix earlier, Nandu, okay? Um, So Netflix is doing this. There's nothing wrong with the picture. Powerful, powerful formation. The upwardly rising moving averages should act as support. So far, everything is on track. This little 3 bars mean nothing. If Netflix falls below, let's say 110, then we're looking at channel. Channel lows are 110, so it could very well do this. Channels are very important. I've traded off channels a lot of times, and so it could do this. Okay, so you're looking at about 110, 111 as major support. If it slips that, the most Netflix comes down, in my opinion, is 108, unless barring any extraneous events, all kinds of stuff, that. But technically speaking, that's Netflix for you. So somebody asked me, 1 second. My friend Margin Call asked me, 1 second. Netflix I showed. Somebody asked me about yeah, Biogen. Biogen was a real pain in the butt today. I was up nicely on it. I don't know why I didn't take the profits, because I still think the stock's going higher. And then it obviously crapped. Let me just get Biogen in the picture. I believe I have Biogen here. Where am I? All of my charts? Hold on. Oh, I have Biogen here. Good. Okay. Honestly, technically speaking, there's nothing wrong with Biogen. It's oversold on an hourly basis. It's way off its highs of 400. Deeply oversold here by the end of the day. The channel has to hold, and if the channel holds, this is what's going to happen. The channel slippage can bring it down to 290. That's fine. You can see that, the Bollinger Band. So if it slips, it can go to 290. What we don't want it to do is to break the 288 level, which was the last double bottom. See that right there, right there. So bottom line is, if it bounces off the channel, the stock is in good shape to move up to the 320 level. So Biogen is a-okay in my book, even though it retraced back today because of the pressure coming into the market. So that's the answer to that question. So I am long, and I intend to hold lower. Let me see here. This chat box is difficult to read, so I'm just scrolling. I'm just reading the questions. Hold on. So somebody asked me what Margin Call asked me what SPX. 1 second. I'm trying to scroll down here. It's terrible. I will go over. I went over the Russell 2000, so that's the IWM, Amar. Okay. Margin Call. Which SPX options did you purchase for November 20th expiry? The ones that SPX calls, like I said before, I would buy maybe 5 or 10 points max out of the money. So the SPX calls I would buy is 2080s, maximum 2085s for the November 20th expiry. So I personally buy in the money and then I buy a little bit out of the money. Can you show JD? Okay. Amar wants to see IWM. Yeah, hold on. Here's your IWM chart. Okay. It's good. I gave you the real background of the why I think IWM is possibly one of the best trades to make right now, even though it's one of the most difficult ones. But then I've never shied up from it, shied away from difficulty, even during times that I don't feel good. The times that I don't feel good and I buy, the times that I actually make the most. So this is one of those times. So at this point, you're looking at the channel, okay? Right here, this is the channel. So we must hold this channel. What we cannot do is we cannot break below, let's say we can't really break below 116. How about that? Okay, because if we break below 116, then all hell breaks loose. That means we're going to come down back to retest the breakout level of this channel here, which is 115 and possibly 114. We don't want that unless you go short right away. This is a head and shoulders pattern. The way it developed, it was moving up nicely. The moving average is constructive. That's fine. Oversold. That's great. So at this point, if it does bounce, the bullish case scenario would be that we actually move from here, okay, and get up towards the 118, 119 level. Look, patterns, it all depends. There are multiple fluid patterns that happen within the same time frame. So when you're looking at this pattern, yes, it's a head and shoulder. A bear will say, okay, it's a head and shoulder. Here's a head, here's a left shoulder, here's a right shoulder. You guys are all toast. A bull will say, hey, this looks like it's creating a massive dragon bullish pattern. And if it holds here, we're going to have this. And I showed you on the Russell side what can happen based on based on where we can go. We can either hold and move up to the 1200 levels on the Russell 2000, or we can collapse. So it all depends on oil and other factors. So this channel is important. And going back and looking at a bigger view, I call the IWMs and the Russell 2000s not only down here but also down here. It actually hit that level, so now it's retracing. We just don't want one of these. I don't think that we're going to get one of those, okay? Hold on for 1 second. There's a noise. Okay, one of my dogs dropped something. How about that? Okay. All right. Let me try to just a lesson on money management, how you scale into options. Thanks for all the education. Well, margin call, I would tell you that if you want all that, then you got to join the group sessions and do the advanced coaching sessions. And from the money management standpoint, I want to be clear with everyone. I am not your broker. I do not want to get into that deep where I tell you how to manage your own trades. The reason I can't tell you how to manage your own trades, because this is a fluid market. I don't know your behavior. I don't know your position sizes. I don't know how much money you're trading. And I don't want to know that. So that's the reason why I don't want to get into that. Look, I left the money management business for two reasons. I wanted more control of my life. I wanted to spend more time with my lovely wife and my great son, and I didn't want to worry about other people's money. That's the reason why I don't handle other people's money. Okay? You know how many offers I get for handling other people's money? A lot. I don't want to do that. So when it comes to the money management aspect of it, there are many different ways you can manage it. The risk level, this and that. But I really, honestly speaking, I don't want to get into that because that brings an extra layer of headache that I don't need. So on that respect, so that's the answer to your question. Learning is an ongoing process. I'm learning every single day, every single mistake that I make. I made a couple of mistakes today. I'm the first one to say it. I wanted to do this update because I wanted to show you guys what's going on here, that it's not the end of the world, but it's a difficult thing. It wasn't a difficult market when we walked in this morning, okay? And so basically, from that standpoint, I just, I'm just, showing you what I see, going on. So I'll do one last question, and we'll go from there. Oh, and by the way, Margin Call, I do have a couple of excellent videos that are on the Clueless 8 YouTube channel, which talk about how I handle trades. I do a lot of cost averaging, so that's something, some people say, oh, it's really terrible, you can't cost average. I asked them, what world do you live in? Maybe in the old days when stock fell, there was a reason why it fell. Now stocks fall for no reason. So why can't I cost average? What I cost average today, I could blow out tomorrow morning. How many times have I done that? Futures are up 4, they could be opening up 16. And I'll be like, shooting the fish in the barrel. So I'm not saying that's always a great thing to do. You have to manage it within the framework of a chart. A complete breakdown stock like Macy's was a loss today, 4 points. I had a bunch of shares like done, okay? And so the point is I just sold it. Forget about it. But certain things like GoPro, I don't even look at it anymore, right? So the thing is, you got to be adapted. You got to be very adaptive. You got to be flexible. You just can't look at things and say, oh, when are we buying it? So that's just the way it is. I look at AGN. That's another one that somebody asked me to look at. And so AGN, this is a chart drawn from a while ago. I've been pretty bullish on this stock. My opinion, the stock is still going to 325, okay, if not higher. So this is a perfect, beautiful pattern here. And at this point, the stock is going to go to 325, in my opinion. So if you have the strength to hold it, I think that whether or not the takeover and the merger gets done, we are looking at this is the daily chart. Very powerful, very powerful. Look at that. That's a 5-day moving average, looking powerful. The blue line here, look how it bounced exactly off that. I love this stuff, okay? Right there, 304, 309. So at this point, the next move is 317, and then you're looking at 324. Powerful stock to hold, in my opinion. We have to respect it. No question about it. And NetTease, which was in the background, we played it for earnings. I have a bunch of shares on NetTease, and where is NetTease? Right here. It's just going. Okay, this looks like another Amazon. I mean, to be honest with you, it doesn't show this here. It's actually at 160, so it's at a new high, right? It's at a new high. Let me look at my other screen here. NetTease is, yes, ladies and gentlemen, is at a new high. What do stocks do when they go to new highs? They go higher. What a powerful stock. I remember buying it all the way down here. I wish I held it all the way, but I played it along the way. So at this point, this stock has broken out, and I would say that if you do in the old days we used to do a what we call a cup breakout. So if you do a cup breakout, get ready for this, okay? This is the depth of the cup. It's 154. It's 54. It's 50 points. Okay, 50 points. The cup breaks out at 155. The stock's going to 205. You might laugh, but that's pretty much where it's going. Okay, now how do I show this again? I can show it in a different way. Watch. Sorry, I didn't get the trend line. I'll end with this. It's very cool stuff. I have nice crayons, as I like to say. Okay, watch this. Extend to the right. 200. Funny, huh? So then you do this. So another way to look at it, technical analysis, my style. It enters the channel, which it did. It's at 161 right now. It's what they call the bear kill zone here. The stock will fly higher. If it collapses down and closes below 144, that's a different story, ladies and gentlemen. Okay, in that case, the stock is going to come down to 128. It's a Chinese stock, okay, but it's a powerful stock. They seem to respect it a lot. It doesn't act like BABA or JD. I know somebody asked me to look at JD. JD's like a weird pattern. I mean, it's still within the channel, so I'm just going to show this. Believe it or not, it is within the channel, and lower end of the channel is 2657. The 50 and the 34 are still climbing higher. I don't know what the heck they did with Alibaba today right off the bat. Maybe it was chain or shorting the crap out of it, but this stock is good for 32. It's still good for 32. Okay, the daily's oversold, so we got to swing it. It doesn't happen this week. If it breaks below 26, all bets are off. The stock's going down. But if it's holding within this channel, very important. Channels are like, stay within the channel. You stay within a secure zone. This is a reversal candle, and it can not very easily, but it can get up to 32. So that's it. All right, ladies and gentlemen, a couple of things I ask you to do. Study all my work. I try to do my best, okay? We have some great hits. We have great people in the room. We have difficult days. And when you have volatile days, you can do two things. You can sit back and not engage the battle, or you can engage the battle, be very quick, get whatever you get, and then sit back, or you constantly engage like I did, and then end of the day in the red, but still very bullish on many of the positions that I have. So the three ways to do it. I've always believed that if as a trader, just like a guy, just like a soldier in battle, you have to engage. If you don't engage, then don't be a trader. Don't be an investor. Then just sit there and just watch things go up and down. All right? So that's all I got to say. It takes a lot of mental strength, but think positive. The world is not ending. Markets have won. These algos and HFTs are real bastards. Excuse my French, okay? And I'll tell you, they will constantly deceive us, but we constantly try to keep on defeating them. I've done a pretty good job of doing it. Go out, spread the word, bring in a lot more people. Let's grow the community, and let's see you all tomorrow. All right? So good night. That's an hour and almost an hour and a half, right? And have a great evening. Thank you.
Thanks, Guru.
Anytime. Bye-bye. Have a great night's rest. And this will be on recording on the YouTube channel. I'll put it up there by tomorrow morning. So if people want to review it, that'll be great. All right. Thank you very much. Bye-bye.